Hey everyone, welcome to Daily Update for Solana BTC. We've had a pretty slow day yesterday, and liquidity is back to its good old fake looking weekend liquidity, where it's basically just a symmetrical chart. I think the intern has turned off the APIs and pretty much just painted whatever they want. So it doesn't really tell us much. All it says is that there's equal liquidity top and bottom, and I'd be surprised if it's even correct. So looking at the 7-day, it's a little bit more information there, but you can see it's starting to even out on the 7-day, which does make it a little bit tricky to figure out which way they will push next. And if we look at the 30-day, there's still a little bit of a bias to the upside on the 30-day, but if they were to take the downside, they don't have to go that far to take the majority of it. Whereas a lot of the liquidity to the upside actually sits higher up. So I guess what that kind of tells you is that although the amount of money to the top is bigger, it would be harder to actually get to it, which therefore means that the smaller side might get taken anyway. And the chart's still, after yesterday's closes, they still just didn't really want to get back up over those key levels. And certainly like what we've seen in the last 24 hours is basically what happens when you just put a daily close between a support and a range trend and just leave it there. And it's kind of like pressing the pause button on price. It's just not going to go very far. So that's where we're at with liquidity. Let's have a bit of a look at these charts and see if we can get an idea of what the plan is for today. So firstly, Sol BTC, it actually can break trend today. It's this tiny little doji. It's got the hold level, which it developed yesterday with yesterday's close. If that hold level was to play out even to its minimum, that would be a yellow candle above trend up to 14607, and that would be a breaker trend. So yeah, it's just not. So this is kind of an example of what I mean by it's in a perfect position to actually create a move up, but it's just sitting there and it's just not time yet. So tomorrow we'll be on the correct side of trend to break it as we were for today. And really it's just a case of do we get a yellow close. Now, I mentioned yesterday the thing about when you start to move through trends like this is that if it goes off to the right but doesn't actually hard close the trend, the problem then is that if they do a trend retest after they break the trend, it's usually a bigger fall. So it's kind of a way to actually create a bit of a pump and dump, really. Like you can, the bullish thing that could happen today is just, hey, they close this candle up, there's no wick on the top of it, it breaks the trend, and then the strength takes off to try to come up to the next hold level or break level. So that'd be the bullish thing, and that could happen in the next 2 hours and 43 minutes. I mean, they could do it in 5 minutes. It's such a small candle. They could literally they could flip this whole thing in 5 minutes if they wanted to. Now the bearish thing is that what they are trying to do is they're trying to actually get a blue candle here. They could even do another one if they really wanted to, just sort of cling to the hold level, and then get further away from the trend before they do the trend break. And if they then do a trend break at a further distance, everyone get excited, the pump starts to go, everyone, we were calling it trolling the other day in the Discord, and then the price goes up, they hard close the trend, they dump back down to retest the trend, but like I say, from a much higher point, which means, pump and dump. So that's what that's showing us. Really just got to see how it closes. It may be good, it may not be good. If we get a real run up before close, it can create a range off this candle, but it has to get consecutive yellow candles above that 14527, which at this stage, it's not going to do that. And if it does create a range off this tiny little candle, by staying blue but going yellow and engulfing the wick tomorrow, it could just be quite a small range. But that's that's where we are with that one. So let's have a look at the safety assets. Okay, so with the safety assets, we've bounced on the support trend again. And I guess what we're looking for here really is just a hard close back below that 68.65%. So that is the daily range. We hit the top, we rejected off the top. Actually, sorry, we didn't even hit the top. We got to level 3 of the daily range, rejected back down. So now we're under the lower pivot. What this means is that if we can hard close back under here, it'll probably try to move down to the 68.06, which means it might not necessarily be able to do it straight away because it's got a trend there, which has been just keeping this thing moving up now for ever since the 25th of November. This trend has basically been the burden of altcoins. But if it can get down and close under that trend by the fact that it's going to try and come back and test the range base, then yeah, if we get a daily close under there in blue, it'll be the first time we've actually managed to hard close that trend. Now, if that happens, the next thing it's going to do is try to travel to the exterior trend. And that would actually mean a bit of an alt recovery, even though I don't think anybody would expect that right at this point, with the way everything, all the charts are looking so bearish. But that is what this could do. Now, the other option, of course, is that it can just continue to stuff us around or troll us, and it can close here. And although it is a positive close for the risk assets, if this closes like you see it now, a blue candle, and doesn't get back and flip yellow, which it's such a small candle, anything can really happen in the next few hours. But although that could be a positive close, it is still on trend. So the next candle could just bounce the trend, go up, test the hold level up here, and that's another dump. So yeah, it's not really being very decisive. It's definitely leaving options open, and from a range perspective, yeah, if it closes in distribution, you expect it to try to push down. From a trend perspective, it's still above the trend, and as long as it's above the trend will keep trying to push it up. So yeah, that's why you're seeing basically such little action in the last 24 hours. It's just kind of compressed between opposing forces. So let's have a look at the totals. So the total market cap excluding stable coins, this just looks like it could be a pump and dump waiting to happen. So you've got a hold level down here that's been created untested. We are hovering between potentially breaking trend, and we haven't done a first touch of the range trend yet. So yeah, well, if this candle closes yellow, it's technically a break of the interior trend. The price would then want to push up. It's going to push straight up into a polarized range trend that it hasn't touched today. And then it could quite well just reject straight off that and push all the way down to the hold level. So this is this is illustration of how you set a trap, basically. For it to be bullish, what it would have to do is break this trend. Ideally, a little bit of a push up, like a 2.68, 2.69 to get rid of the wick, and then it would need to open over the top of the new trend and try to push through the range trend, but it has to get up there, get over there, and stay over there. There's many ways they can make this into just continued boredom, like they can close just up in this wedge between the break level and the range trend and just sit up there for 2 days if they really want to. That would be kind of more boredom. You've also got like a couple of break levels up here that are really close together, like 2.73 and 2.77. So they can just bounce around in there. It just means more boredom. So if they want to keep the market sideways, there's plenty of ways to do it just based on the structure. But if they want to pump and dump, they can definitely do that as well. So yeah, any push up into this range trend or these break levels with large amounts of speed to it, I would just be very, very much not trusting that. Now, of course, because it is such a small candle, the other thing they could do is just drop it down and close it blue. Only has to, like we're at 2.67 now. They really only have to go fractionally below 2.67. It is such a small candle of change. So, yeah, that's pretty much all we can tell from that. We may break trend, we may not. Now, if we do, let's just double check what that wick is going to be like, because that trend's really old. It would be nice to break it. Comes from 8th of October. Okay. So that's what, if it does close yellow, that's what the new one would look like. And at this stage, it would be touching the trend, so not ideal, but it only has to go just, yeah, 2.68, and it would be totally clear of the trend. Create the trend and move up. So that's where we're at with that. So let's have a look at the altcoin totals. Yeah, so this is interesting. The altcoin totals have already hit the range trend. And if the price maintains this level, the new one will open over top of the support trend, but it's not actually breaking the trend quite the same as what it is with BTC. So it just sort of shows the strength at the moment is more in BTC. If everything just closed exactly like it is right now, technically we haven't broken the trend for alts, but we have broken the trend for BTC. That's pretty much what that is saying. So for this to become bullish, you just want to see like an altcoin pump before the end of the day, which got the price or got the totals up to about 917.86, and then it would be over the top of everything and ready to bounce. Probably straight into an origin level again, but hey, you know, nothing seems to be easy at this particular point in the market. And of course, you got a hold level sitting down there just waiting. So, as long as we don't get a day of not touching that range trend, then yeah, we might get over the trend and break through it. If it has one bad day and doesn't get back to that range trend, the next time we touch it, we're probably going to come back to this whole level down here at 873.68. So, yep. All right, let's have a look at Sol. So just a really, really low time frame look here to begin with, but you can basically just see how we've just been in compression, just continuous compression, moving across for 24 hours now. So that is, I mean, the trends have been subtly breaking and moving, but it applies both ways. Yeah, the support trend is basically just following the price, and the resistance trend is just following the price, and the price is just staying kind of in the same sideways pattern. So hopefully we'll start to see some action from that. So let's have a look at the daily. So how that looks when you look at it on the daily is we have this range level that we closed up and over, and that's basically just keeping the price there. Then you got this range trend. Now, the odd thing about that range trend is it looks like we haven't touched it, and that gets me a little bit suspicious because it makes me think they're trying to make that range trend into a higher time frame type resistance. So we'll just chuck a little line on here, and then we'll just go down and have a look to see if we have touched it, because you know sometimes the daily chart doesn't quite represent where price truly is. So yeah, when we come down here, we can see we have been bouncing off that. So just stopping the price from going up this entire time. And find that daily chart again, not the weekly, not the daily. Oh, that's the 1 hour because I changed it. Oh boy, having a moment, need a second coffee. Okay, so pretty much we are sitting between a range level and a range trend, and that's why we have this tiny little doji. So unfortunately, it's not going to break out of that all that easily unless they can just do a little pump just before the close at the end of the day. And if they do a little pump before the close, that's the kind of signs you're looking for bullish intention. It's not economical with 3 hours or 2 hours and 30 minutes to go to send the price up, and then have all these people who might be quite bearish, because if there's a lot of bearish people right now, they'll be looking to sell if the price moves up. So if they start pushing the price up now, people just sell into them. It's just not very economical, and they'll just end up having to buy more to keep the price up. But if they wait until you've got 15 minutes to go, and they want to structurally position the price, then they could start buying it up at that point, get it over the top of the trend, and then open the next candle and have a push. So at this stage, it's probably just going to be boring until we get closer to the end of the day. And of course, if they want to be bearish, it's the same thing in reverse. Like if you want to try and push it down below the range level, you're better off just waiting a little bit to get it down below the range level. But it is relatively bullish that it hasn't just rejected solidly off that range trend at this stage. We do have a hold level sitting down here at 123.2, and I would have expected 123.207. I would have expected that to be tested as soon as it had sort of run into that range trend, because typically the way these things work is it would hit the range trend, come back to the hold then sort of moves sideways, etc., until it would get to a point that's over here, probably around Christmas Day, and then at Christmas Day it has to make a choice, because it's got a range trend, it's got a hold level, it's got these trends sitting up here, and it's got to either break to the upside or break the hold to the downside. So decision time. But the other option, of course, is that this does close yellow, breaks the interior trend, could do that sort of fake out, maybe push up, dump down to the trend to do a retest. So there's a few options there, and they're definitely going to be the kind of thing that could change in a matter of minutes based on how small that candle is. It can close in distribution or accumulation, and whichever one only takes what are we at now? 126.3, and the candle open is 126.175. There is about a 16-cent difference or something silly. So yeah, they can change that any moment. All right, let's have a look at some of these bigger levels and see if we can see what's going on with those. So there's not much to be drawn from the 2-day close today, unless it gets up and over top of about 127.6. That would pretty much put it back inside the previous range, and but it's also not hard closing any blue candles down underneath the range at the moment, so it's really just a nothing close. It's still got a trend to have to deal with. It may create another trend today, but it's also going to be over the top of that trend, just based on the directionality of the wick and the body. It's going to open in a place that's capable of actually moving up. So yeah, nothing really much to go on here. If it gets over 129, then it might create a hold level over 127.6 back inside the range. But yeah, really nothing. 132 is where we're getting a bit of resistance forming, I think, today, which is pretty confluent with this opening, heading into the trend, and then maybe rejecting. But we'll get to that on the bigger time frames. So what's we got? We've got 3-day close. Same thing. It's going to create some kind of interior trend today. I've put little aliens on the screen to try and remind myself which side is closing, but then I've put one over here and I shouldn't have. Oh yeah. See this little tool over here, everybody? This is the sync tool. So if you're using layouts and you have that on, you'll get them on both sides. So you can, any drawings you add, you can synchronize to a layout. You can synchronize across every single chart that uses the same pairing. So if you want to put a little alien on a chart and you only want it to be on one side, then you turn that little thing off. And of course, if you want them to be on both sides, then you have it on, and you can then put it on and you get the alien that's on both charts. You can also just after the fact go in here and change it. So that's what all this means. So if I want it just to be on this side, it can be on this side. So now this one is just on this side and this one's just on this side. Delete that. And that one doesn't go away. There you go. There's a trading view tip for the day. So yeah, same thing really. Needs to be up over around 126.9, 127-ish really to make any major difference. So nothing really going on there. What do we got going on here? I'm just watching that Sol BTC candle right now, just pushing up a little bit. Okay, so the 4-day long is still in play. There is no actual 4-day close today, but yeah, this is still just in play up to that 135. It's really just getting held down by a whole bunch of resistances, particularly because we've got to get back up inside that range. And it didn't help that they closed it down under that 126 price point. Sorry, 125.919. So that was the one from yesterday. Closing under 125.919 kind of just meant we had a whole bunch of horizontal resistance we had to push up through. And the only real way to push up through horizontal resistance is liquidity, and you're not going to get a huge amount of liquidity coming in on the weekend. So all this stuff kind of works in confluence, but if we can get back up above that 125.919 level, get a bit of liquidity into the market, have a few shorts come in that we can squeeze through, then this will just keep moving up to that 135.729. Okay, so and 5-day close today. So we have already completed the 5-day minimum shorts off the whole candles. So up, down, job done. We're looking at anything slightly higher than where it is now would be good, but where it is now does open over top of the trend, so it gives you that ability to have a 50-50 chance of breaking the trend if you have another 5 days of good price action and the price goes up. As soon as we break one of these trends, you pretty much target break levels or hold levels that aren't tested, and actually everything in here in a 5-day area has been tested. So hold levels tested, break levels are being tested. The new one that gets created today, if the candle closes blue, would probably be the target, and that's about that, 139.7. So now, of course, if they want to make this thing pump, what they do is they get over the top of the trend, they go up and hit the break level, close yellow, break the trend. The algos then go, well, the break level's already been tested, that break level's already been tested, what's next? And then they go that hold level. That hold level, which is a big one, which ranges between 149 and 164, becomes the next target. So, and then it goes for it basically because everything else has been tested. So it's the charts are set up that if they really wanted to pump it, it doesn't take much. They just need one good close, and it could take off. However, there is some pretty bearish stuff going on, right? Okay. 6-day close. It's over the top of the trend. Everything's tested, including the origin up there at 144. It's back inside the range. However, if we now look across in the other direction, what we do have is we have this kind of little hidden hold level here that we haven't gone and touched yet, and that's at that 132.185. So it looks kind of like it could just take off free and clear as far as the trading view perspective, but there is a hold level sitting there. And since we closed the left-hand side, we haven't tested that. So yeah, we do potentially have that 132 resistance. And then today we get a 7-day close, and surprise, surprise, you get some resistance popping in at 132.15. So it's kind of lining up with the other time frame, which already created it. So, and this would be barely over the top of the trend. Needs to travel up just a little more. In fact, it can be quite a bearish close, this one. It's got to get over, it's really got to get over the base of this candle, so otherwise it could reject straight away and try to create a range. So that's about 127.6. So it's really got to get back up over that. Don't really want it closing under that wick. Okay. And then, yeah, looking at some of the bigger stuff like the 25-day close, we have made this move. So we basically closed under the break level. We hit the break level at 144.7, and we've gone down to the origin at 120.487. And I know, yes, we've gone higher and lower than these numbers, but yeah, that's what you get with the big time frame stuff. That, you know, that's why you can't just 100x an entry, on some of these levels. But all that's really happening today that's significant on this is that the trend is shifting to the bottom. Now that's actually good. Like we want to get that trend out of the way, and we want to break it, because if we break it, we can introduce a retest, which gives us a target in the 160s. This is going to be the hard close of the 144.7 level, so that also then gives us a target for a retest at the 144s. And we have the trend support at the bottom, which gives us something else that we can potentially bounce off. So once you shift the trend, you can bounce off the trend. So hopefully this will lead to some expansion and less of this stuck sideways type price action, by giving us some targets and supports that are a little bit further away. Okay. Now you may see these numbers down here, like 88. They are well and truly in play. So probably the only thing I would just say it's worth being kind of hesitant on at the moment is, if we spend too much time down here, we end up inside some of these bigger, older ranges that have never quite touched their obligations, like 90. And I found one the other day that is a really big one that's aiming for like $42 on Sol. So they will probably play out at some point. Now, whether it's now, whether it's a year from now, you don't know. But they're there. So personally, I would definitely be de-risking on any pump to the upside. There are some hopium levels that I've found as well, which we might go over on a day when there aren't so many closes. But just want to see how things play out, whether they actually start to flip any of these little closes a bit more bullish. And all you can really do is just focus on the little closes, because it's the small ones show what's going to happen, like next step. The bigger stuff can take 6 months or so to play out. But yeah, there are some pretty low numbers just sitting here teasing. Meanwhile, we are moving trends. We are giving reasons to go up, right? So that's what we're seeing there. Okay. 35-day. Similar thing. We're shifting trend to the bottom today. Now, we haven't tested the origin for all of this, which is sitting down here at 109.417. So it's possibly we do go see that. From the other perspective, we also haven't tested the other range break yet, which doesn't technically hard close today from this perspective, but we may bounce off the trend on one side and end up tagging that 137 on the other side. So, and the good thing about moving the trend support today is that if we do dip tomorrow, we'll be dipping through the trend to tag the origin, which gives us a better chance of actually traveling up. And also, if it does a retest, it's another reason to retest 144.7. If it does a retest of the trend, it's another reason to retest 160s at that sort of level. So it's not looking too bad. Okay, so the 53-day closed today. There's no trend moving on the 53-day, but it's also not broken because it's not a full body close underneath it. And if we were, we are staying above the origin level unless we go below 120.487. If we were to bounce from here, you could sort of expect it to bounce back up to hit the back of the trend, which is about the, it depends how long it takes to do it. If it's a slow grind, it, probably hit it in the 160s. If it's really, really quick, maybe, probably still 160, about 159. There is also the potential of a rejection from 155. And there is also, because it's the first 53-day candle to actually close below the hold level, there is also the possibility it goes up to 179 to retest the hold level. So that's all bigger stuff. Could take a while, but it's there. If we see a close below 120.487 at some point, then really it's just game over, because you do have, you got things like these levels from back in 2022, and these are just set up for bear markets. So they're basically $40 levels, just waiting. But they only come into play if you close back under 79, and that's the kind of thing that happens in stages. We've already got levels, aiming below 79 based on this cycle, and then once you get below 79, stuff based on the older cycles can kick in and then take you down even lower. And if all that plays out over the next, say, 200 days, then all you'd be doing is testing this trend that's down here and perfectly lines up with those range levels. So yeah, it's probably more a case of when than if, but we'll see. For now, we're holding. Okay. So we're creating an advanced hold on the 59-day. So there's trading view timeframes. This has got the origin down there at 109.417 again. So that 109 level should create some kind of bounce. It's also the 3-month origin level, so it's a pretty big level, that one. And if we were to tag that, wick through that, etc., you don't know whether or not they might wick through it to complete some of these shorts, because we're actually in this older range area here from 155 down to 89. So they might choose to wick all the way through there and then come back up again. My biggest concern with some of these really big levels is, like, if they really wanted to, they can wick through that as a 3-month level, and they could do that in January and stay down there till March, before they actually push back up again or bounce. So, or they could tap it this month and then be in a little bit more of a situation where it's going to try to push back up almost straight away. So that's your whole Santa rally theory. Or worst case scenario, the reason they're hovering like this is because they want to hit that thing on the end of the year, like literally the start of the next candle. They want to poke below here on the start of the next candle. And if they do that, it's just gone, because it will, they'll be opening on the underside of it with a fresh candle and it will just dump. So you're not quite sure whether this is the calm before the rally or the calm before the final push into a position of absolute obliteration. But one of the two is going to happen, and we'll catch it. We will. Okay, so the 118. So this, which want it to stay above the wick, and it's really teasing. So this is that 125.919 level that we said was important the other day, and as you can see, it's just sitting above it. So it's most likely going to open on the wrong side of the trend. It's most likely going to, create a hold level, because I can't see it coming up to 147 before the end of the day. But this can, if it can stay above that wick, this can actually create a retest back of the hold, kind of like a reversing, and that's more confluence that it might come back and just test that 147 level. But yeah, as for now, that's pretty bearish. So a rejection or a continuation would be down to about 107.9, so 108 sort of level. A rejection of the back of the trend would try to give it continuation to the downside as well. And there's really not a lot to stop it. Yeah, it would hit this range level, and then the range level would decide whether it wants to try and push back against the hold. But you know, one way or another, that's a really bearish looking close with a lot of potential to disappear off to the downside. The only sort of saving grace really is that the exchange doesn't consider it closed on the same day, so it might not kick in for a while. Okay, and then these are again pretty bearish closes. So anything below 129.346 today kicks in this big short. Now it's a really high time frame short at 125 days. So as you can see from the last one, which is still in motion, so the last one takes us down to about where is that going to? About 70. Trying to see why I've got a couple on there. 70, 69. Sorry, folks, why I got that level on there? Oh, okay, range trend versus normal range level versus normal level. Okay, so if we close below 123.436, it's really bad because that would be a full wick engulfment, high probability, range creation, that kind of thing. I don't know whether it can really do that because the pivot level would be below 0, so that's kind of doesn't make a lot of sense that it could even do that. So we're probably not going to close below 123. Now, the other options are just minimum retracement shorts based off fib levels. Now we're already in one. We've been in it now for these 2 candles. We're back inside the level. And this might then actually compound the misery, because if we close below 129.346 today, then we have created another downwards break on the same timescale, and we'll have these targets of 79 and 70, to the downside to go and tag. Now, it is not very common for high time frame shorts to just trigger and go. Like, it doesn't really matter what you look at. Like, if you look back at this one that from 2020, whatever, what was that? 2020, 2021. We look back at the one from 2021. We didn't go in and then come down to 98 straight away. We went in at 160. We went all the way up to 210. We had the first go at going down and hitting the target, which took us down to 108. Now that bounced, so therefore created a trend. The new candle opened, tried to push down again, and that wanted to, this whole thing is just trying to get to 98, right? So it's just, you just can imagine there's just always going to be sell pressure unless these things get resolved. So then it comes down here, it hits the trend. The trend says, nope, let's go up, and it goes up. Then, of course, it hits the break level at the top, more sell pressure comes in, it comes down, break level pushes through the trend, and it tags the target. Once it tags the target, you get this lovely bounce because a lot of that sell pressure is then gone. But unfortunately, by that point, what you've done is you've created your next big move. So we come up into here, and we sort of, it would be this reverse level is probably the thing that actually created that to push back down. And then the next thing you know, we're trying to get back down here again. So all of this is now trying to complete this 70.6 level down the bottom here. what you don't need is more sell pressure being introduced. And unfortunately, if we close below 129.346, we are introducing more sell pressure. So then it may bounce up to grab some liquidity, because once a decision is made that we're going to go and hit $70, it's like, okay, well, we better go take out the shorts. So we might get that rally back to the upside before we actually then get, the move down to $70. But it is also entirely possible, the way the markets are these days is they like to do what people aren't expecting. And if everyone is expecting that there will be a bear market rally, if everyone is expecting that there will be a Santa rally or whatever, then maybe they just go to $70. And that's it's like, here whatever people were thinking through all of this time, and we're talking 125-day candles. People are bullish, bearish, bullish, bearish, bullish, bearish, all through here as the price ranges up and down, up and down, up and down. But the master plan was it was always going to come hit 98 at some point. And then it hit 98, sell pressure gone, off we went, 210. But yeah, here we are. These levels are going to happen at some point, and you just don't know when. But be ready when they do. Okay. What else we got? There's a couple other closes today, but there's just nothing really structurally happening with them. And then we're up to this big beast, which unfortunately may be opening. Actually, sorry, this is a exchange close, this one. So this is the left-hand side. Where's my little alien? No little alien. Okay, so as long as it can keep, just sort of shows you how right on the edge we are right now. As long as it can stay over about 124.6, then it is not a distribution candle and it is not breaking the trend. In which case the next one might push up to try and recover the trend, and that's actually bullish. That adds confluence to the targets we already know are there at about 173. Okay, so we might add confluence. Now, if they push this thing down towards the end of the day, and we've got, how long we got to go? 2 hours. If they push this thing down below 124.6, or they flip that candle into a blue candle, then yeah, that is a break of a very big trend, and in which case the support level would have to be something like the backside here, but it's pretty hard to figure that out on these time frames. I mean, definitely there'd be support down here, but I don't think we're going to drop to $30 that quickly. There would be a range based off this, which would be a bit tricky. Ugh. Wish magnet tool worked on these charts. Okay, close to giving up. We'll just call it that. So you got a range level there, that third range level, that second range level. I mean, effectively, if it loses this trend, it's going to come back into this bottom range to try and recover it. So it's pretty confident with running into that sort of $70 realm. But at this stage, it might not. It might stay up for the end of the day. Okay, let's have a look at BTC. Okay, so BTC on the daily. So like we said at the beginning, it's looking a bit stronger than alts. It's in a stronger position than alts on the totals, etc. But it's not really out of the woods. If it closes, as you see it here, what are we, 88.215? The next candle is still capable of just rejecting off the trends. They could pump and dump it. It's almost set up for a complete trolling. Like we've got a range trend that will be first touch, probable rejection tomorrow, which is up around that 90 area. So say 90.2 through to the break level there at about 90.3. There is also a prior broken trend that could be retested and cause rejection there. We've got the hold level and we've got the origin support back down there at 86. We're closing back up inside a break level, but that was never actually an origin. However, hard close below. So actually, no. Oh, it touched it. That's kind of debatable. That might become an origin tomorrow because it touched it, touched it, touched it, touched it, touched it. It did hard close below it, so that would typically invalidate it, but everything touched it. This hasn't touched it. So yeah, you could see a tap, pump, dump, anything along those lines, but it is definitely looking like a bit of a troll setup for the daily. However, it is, stronger. It is a stronger position than altcoins. Now, there's a couple things. We'll get a new trend like that. It could open on the other side of it. So now if we put a bullish hat on, if they really want to be bullish, all they have to do is open on the other side of that trend, tap the back of the trend, and bounce off it. That's all they have to do. And maybe we don't come back to these lows. So there's your bullish side. But yeah, the bearish side would say something along the lines of we haven't retested the prior broken trend either, and that's down here at 82. So so we could be going back down there. At this stage, it's just probably I'd have to class this as being under the halfway of the bigger daily range that we've been in for a while. And when you're under the halfway, you still really should be aiming at bearish thoughts. Okay, let's have a look at this bigger stuff. So the 2-day close is not so bad if it creates this hold level. So back up inside of its range and looking at a hold level there at 87821.4. So just watch to see whether they show intent to sell it below that before close. The trend is breaking today, but it moves to the top side wick. The wick is too long. At this point, the new candle will kind of open on the trend, and we do have a hold level. Just checking this out. Has that been tested? The height. Oh, that's cheeky. So 90.594.1. $1. It stopped $1 before the hold. So yeah, I would say this is. I'm just zooming right in on this. I can hardly believe this. Yeah, you cheeky little gap. Okay, so there is definitely the potential for a scenario here where they break a trend, but they have a hold, they bounce up from the wrong side of the new trend, hit the untested break level, which you'd only know if you really zoomed in was untested, and then reject. So that there could be pump and dump type games at play there. So we've had a few reverse levels getting created recently, which is kind of a sneaky way of actually using resistance holds, but to move the price up. And so to do that with this level, it would be a case of getting up above 95.95 and closing up in there in another 2 days' time. But at this point, you're not going to know whether they're going to do that or not. It looks like, yeah. So if they push up a little bit more before the end of the day, that's kind of bullish intention. Obviously, if they get rid of this wick on the candle by the end of the day, if you just see one of those little pre-close pumps, then that's all very bullish, and you can just expect that they're not trying to create so much of a trap at that point. But no, other than that, we have bounced off an origin. We've failed to engulf the wick. We're not creating a range. We may open under the new trend. There's a little sneaky hold level there that is untested that will probably dump the price. And it looks like we could just be in for another little trolling event where they pump and dump. Okay, let's have a look what's next. The 3-day close same thing. It's going to be new trend. Now it'll open slightly above the trend but touching the trend. And then it's got the exterior in the way anyway. And then this 3-day hold here has not been tested. The wick has not touched the body. So the wick has touched the wick, right? So normally you get violent rejections come off the wick. It's kind of like the if you imagine like the people with FOMO, like everyone with FOMO is the moment it gets close to this candle, they just start selling. You know, it's like dump, dump, dump. And then the greedier parts are all up inside the body. All the refined levels are going to be up inside the body. But typically you'll get a fast reaction of wick rejections and you'll get a slower reaction of body rejections. If all that's happening is wicks are getting touched the whole way down, then it's a really bearish market. Everyone is just eager to dump. If what you're getting is candles going up and staying and, well, going up into the body, coming down before close, then it's kind of, you class that as sort of like a middle type, not super bearish, but just like still a bearish market, it's going down. And if they go up inside and stay inside and close inside the body, then that's how reverse levels can be created, and that typically means that the market's moving bullish, so, or flipping bullish. So there's a little bit more for you, but either way, trends are trends. You don't tend to push through trends into holds and not come back, so it's looking a little bit trappy. Okay. So I was looking at this one this morning. So it's it's a 5-day other time frame close. It's got a range trend in here, and it didn't quite tag the range trend. Like whether this is a slight rounding error. Unfortunately, I can't drill these down to lower time frames to actually check whether that touched that or not. But it's it may be bouncing off the range trend. It's already tested the hold level. It might open it's going to be touching the trend, which means it can't break the trend, but it may get a temporary bounce off that. So it's, most of these levels are actually tested. It's kind of why I think it's like I think they're setting this up, and I just don't, like when you watch the trading view chart, I just don't think you'll see it coming. It looks like they're just setting it up to come up to these 9,800K levels. But yeah, fortunately, there's still a lot of bearish stuff, and I don't know whether they'll just go there or whether they'll just keep stuffing around. Okay. Because then you look at, say, something like this, the 6-day close on TradingView, which is basically a doji. So we don't quite know what this is going to do. It's either going to close yellow, introduce a new resistance trend, in which case it'll open touching the trend but on the top side. So it could have a go at the next trend or the break level up here in the 93.9 sort of area. In fact, I can give you exact numbers on those. What is it? 94.147. Okay, so it could have a go at coming up to there. Or it could just come down a tiny bit, because this candle opened at 88123.9. We're at 88193.4, so it only has to come back, $60-$70, and it's a blue candle. Now, if that happens, we can't really consider that a break level at that point, because we haven't got a base or a reversal of the range. There would possibly be a range trend, because it would be the first blue candle to come in here, and then the bounce of that range trend would then possibly come up there to that 93. So, if it goes blue, maybe they come down and hit the range trend 84 again, so like another dump, and then come back up to 93. If it closes yellow, they get over the top side of the trend. They're technically breaking one of the interior trends. They might just go up from that point. So, but it's really the $60 in that for BTC close as to whatever it does. So I guess we'll just have to look at that once it's closed. And the 7-day, that looks like it's going to create a hold level unless we were to close over 89,192. So unless we do jump up $1,000 in the next hour and a bit, then we'll probably get some resistance there. Now it's going to be over the top side of the trend. So this is where you can have, because hold levels typically target trends. So you could push into the hold level, come back down to the trend. That is sort of implying that you get, back down into that 83, 84 area after a little pump to the upside. Could go down first, then up, but normally it would go up, then down. Okay. Now we do have a 25-day that's going to open on the top side of the downtrend. So it'll create a downtrend as long as it closes yellow. So that means closing above 187.2 something ish. Now that will bring in the first downtrend on that time frame, but it will open with the candle on the top side of it, whilst probably touching it, so you can't necessarily break it, but it could use it to bounce. Or the bearish scenario is it just pulls it back down into the trend again because it's touching it, and that would be a big dump. Like, because if they ever try to pull them down back under the trends again, they normally get the whole body. Excuse me. They normally get the whole body under the trend, which means you're going down into those 70s, 74, 75, somewhere around there. Okay. Then the 35-day close, slightly bullish that it hasn't closed under the 86,523. So this time frame was capable of creating a distribution range, but to do so, it had to get a 35-day candle closing under 86,523. Hasn't done that. Now, it's on the wrong side of a trend. So yeah, 86,523 through to about 92 could be a range. Now, if it gets bullish and it goes, cool, distribution failing, I want to test the base of the range, which is normally the next thing. It will come back up to the wick of this yellow candle up here, which is about 101.6. So that's, yeah, it does look like it's failing to distribute. And same thing on the 53-day. So we are closing a candle today that is going to try and make a range. It's going to make a range trend on the bottom. We haven't hit the break level, which is 74.666. Wow. And it's basically exactly the same range. So this 86,523 level, or any dip below it to the range trend, could reject aka support, and head back up to that 101 level. There is, though, this in the middle of it at 96.5, which is your hold level, which we're closing inside of. So the hold level could become a reverse level. So, if you see the price starting to pump up, you'd want to take some profit off the table at this sort of level, about that 96.5, because if that then rejected it, well, it could just go down from there and continue down. So, and then of course, if it gets through there, then you're looking at the 101, and if it gets through there, you're looking at the 109, and so on and so forth until it gets back up and hits this hold all the way up here, which is probably about 110, 111-ish. Okay. 59-day close, inside the hold. This has got that 93,570 number. So that's one of the ones that's more common across TradingView. Just watching that price right now on Sol has come back down under that 125.919 level. Oh, that level. So this is capable of creating a range. It's not a single engulfment, but it is capable of creating a range with these two candles, making 93 potential resistance, just 93 flat. So it's pretty confluent with that 93,570. So if it comes down and bounces the new trend, because the trend is breaking today and moving from here to the bottom of this candle here. So new pivot point down there at about 80,600. So if the next candle comes down, taps the trend, and then starts pumping up to the top side, probably just look to take some profit as soon as you start to see 93. 93, 93,570. Then when we look at it from the other direction, it would be more like, your 96s, that sort of thing. But yeah, that's what that's telling us. And 118 is creating more resistance today. It's also slightly lower down, potentially at 92,858 if we go off the wick, 94,970 if we go off the body. And it is still above basically the oldest trend that exists. So yeah, if you got that 86 bounce, could even be a bit lower, then yeah, you could target back to those holds. And like I say, these high time frame holds, they don't typically just dump straight off the very, very most bottom part of them. Normally the price goes back up inside, but yeah, I don't know. Most people would agree this has not been a very normal cycle. And Bitcoin's almost back down to that 88,123 number again. It is pretty relentless, actually. The way that they get close to the close and they put the price right on the line. You could actually almost predict where the price is going to be on any given day based on the behavior lately. They put it right on the edge, for any given close. So if you know when the closing dates are, you know where the price, and you know the ramifications, potentially where the price could be. That could be good for poly market. Okay, so the 125 is not engulfing. Needs to close above 87,567, and then you might get a bounce back to either a reverse level at 96,602, or if you put your bullish hat on, this is the kind of thing where, sometimes you look at these charts in hindsight and you go, oh, great, we bounced off the 1618, we went to the 2 because it was retesting, it closed inside the range and retested the pivot level. And it's all good to look at that in hindsight, but if you actually want to trade it and make money, you need to know in advance that, as the price starts to move up, if all of the lower time frame stuff starts to get bullish every single day from now on, or soon, then this is a 125-day move, and it could be wanting to move from 87,567 up to 111K. Right, so that's just a range level, but it's just really big. And not much going on here. We're not engulfing the wick. We're creating another resistance, really high time frame stuff around 98. We're creating the first time trend through there. So yeah, it's pretty, it looks like it might open kind of touching the trend. Yeah, not too much to look at there. $93,570 again, 97,450, just continuous potential resistance levels that just pop up based on this big stuff. And this is actually really bullish. But I don't know what it means. There's no target. So yeah, you might be able to look at. So this is a 265-day move. And I don't really know what the target would be for this, but it looks like it's potentially hard closing a 5-year channel, which I don't know, maybe it is. If that is the case, then Bitcoin go up. No, that would mean that's your new channel, roughly. So it could be exiting this channel that it's been in for 5 years, and it might be entering this channel, which is kind of cool. If it does that, you saw it here first, and if not, delete the post. Right, that's us. Let's have a quick look at Tesla and MicroStrategy, but it's a weekend, so they probably haven't done anything. Yeah, weekend, of course. So just a reminder from yesterday's video, really. Tesla is inside a daily range, kind of trying to make a weekly range. It hasn't tested the pivot of the weekly range yet. This is rejecting the top of the daily range currently. Really, whatever comes next is it either ends up under 475 and moving down, or it gets above 489 and then tries to push up. And then if we see what that means, it's all inside this weekly range. But the weekly range has started from a really poor position where it started from underneath the base. So these candles are almost set up to fail. So they need a sudden shift in momentum, and it needs to be continued to get above, one of these levels like 500, and they have to get above there and stay above there, and then you need a whole nother week of accumulation up there. And if that doesn't happen, it's just a big trap, and it's once it hits one of these levels or sweeps one of these levels, it'll just be taking out shorts and then probably going back down and 429 or 406 or whatever. It may lose the whole range. It's if this whole thing has been built to be a trap, then it'll end up going down to some lower level. But at the moment, I guess you just have to wait and see. You're probably going to know more so just based on the daily, because if you get a hard close of a daily candle, so complete body, nothing touching, up in this area up here above that 489.9, that's above all of the daily stuff basically. And then you have 509 as your first range trend, which has never been has it been? Nah. These two range trends through here could give pretty decent rejections. They've never actually had a first touch rejection, like because they were broken by these candles all the way through here. So it's that equates to 509 or 524. And then you've got even older ones. Like this one. I wouldn't be too worried about these ones, but this one here maybe it has a go at that, which is 550-ish. So you sort of want to see how that lines up with the weekly, which is 546. Prior broken trend retest, yeah, may not. It may wick through there, but there's a lot of stuff going on at the top of the chart there, which you don't really see it when you look at it on a weekly, but you've also got to consider that this weekly range isn't really a proper weekly range because it started from the wrong side of resistance. So I guess we shall see if Tesla manages to take off or whether it ends in tears. I think general sentiment around Tesla right now is so bullish, it just seems like trap. Like general rule of thumb, when everyone is saying that something is going to go to some really huge number, people are usually being used as exit liquidity. Doesn't mean that it won't, 10 years from now, but it just means from a cycle perspective, big players don't buy and hold. Big players go in and out, and they move the money with the cycles. So we shall see how that goes. MicroStrategy, unless we see this thing up over 199 in the coming, what do we got, 11 days, wow, Christmas in 5 days, unless we see this up over that sort of 199 by the end of the month, it's probably not a lot of point looking at that. Okay, that's us. Hope you got something out of it. We'll catch you again on the next one. See you. Like, subscribe, and all that stuff.